very pleased today to be joined by Tim Rehder of Earlybird Venturing On series. Tim, tell us a little about Earlybird and about yourself.
Yeah, thank you, David, for having me here in Barcelona. As you said, I'm one of the partners at Earlybird. We are a pan-European venture capital firm.
Can you give us an example of a company that you backed that we might have heard of?
Actually, quite a few. We were the first investor in a company called N26, consumer bank, retail bank out of Berlin.
So your fund name is Earlybird. Does that imply that you get in at Series A or even earlier? When do you try and invest in a company like N26?
Yeah, so the brand really stands for what we do. So we are typically trying to be the first institutional check. So that means it could be around seed already, and it could be around A. So we are not really differentiating, let's say, between these two. So we'd like to be, the first institutional investor next to the founders, and really from there shape the story with them, shape the overall vision, look a bit about the product development, key team development. So we like to be their local first institutional partner.
And what would a typical ticket size be in that first stage?
It ranges quite a lot these days. So we can invest everything from a good 1 million euro up to 10 million. Historically, we've also led rounds that were just increasing that part a bit. So going up to 15 million. The check size doesn't really matter as long as you are, let's say, really in that business from the start. And what we have done over the past, especially 5 years, is that we became very verticalized focused. So the whole team is essentially been split into sector teams. And within these sectors, these teams essentially do everything from that, let's say, first 1 million up to also, that higher
amount. And are they separate funds, or is it?
It's one
fund with multiple strategies?
It's essentially one fund. Currently, how we have done it, we have 5 investment partners in the fund, and each individual partner wears one industry hat, I would call it like that. And that partner has built, so to say, her own team, investment team inside these sectors, but it's grouped in one fund, and we together build the portfolio.
What are the characteristics? So you're trying to catch these companies early on. So let's stick with N26 as an example. Is what attracts you to a company like that early on? What are the metrics or the aspects of that business that encourage you to invest?
Yeah, so typically when we invest, there are not many metrics to look at.
Yes, you can't look at historicals, can you?
Yeah, so we're pretty much real market opportunity focused and team focused. So these two things are really driving the core of our investments. So we really like to see, teams that have a global inspiration and a global vision of creating something very big. So we like to see big markets that they really want to challenge. We look at the current composition of players inside that market and how you, for example, can challenge or disrupt certain big, incumbents in that. And then, the team is, so I would say when we invest, the core really makes the team. If we have a good feeling about the founding team, this is really what drives our passion for making an investment early or not.
You stress the sort of ambition of the team as they want to be a sort of global leader. Is that a problem in Europe? Do you think that entrepreneurs are ambitious enough?
I think it's not a problem anymore. I think that people also over the success stories that we have built here in Europe have seen that you can build a very meaningful global business from Europe and scaling globally. Maybe that mindset was missing maybe 10, 15 years ago. But since the European entrepreneurial journey has changed so drastically along that way, also given that we have been able to create so much innovation and long-term value here in Europe, I think that mindset has shifted with that. And it's it's something that we obviously are living for as a venture firm, because we need those big outcomes to drive, a meaningful outcome on a fund level.
Yes.
As partners of the firm, we are looking for something that either can, become a multi-billion opportunity. And if we don't see that, then we also don't invest in that.
Can we talk ratios? I mean,
Yeah, we can talk ratios. So it's a real outlier business. Essentially, when you look at our venture portfolios also of the past, you would see that around 20-25% of the whole portfolio are driving the whole IRR. Typically around this good handful of companies that are capturing the whole portfolio level value, NAV, over time. And we just need to see that we have a meaningful ownership in these companies. And then they can bring us, let's say, 30-40 multiple on an investment level that is then leading for a good outcome for a respective fund.
Yeah, but does that mean that in terms of the attention that your focus is on the winners? I mean, logically, people would say their focus is on the winners, but it's very hard if a company is struggling to know when to give up or let go.
It sounds also unfair, and it's obviously also a time question, I would say, because when you start building the portfolio, you can't really see who that outlier return could be. So you try to be quite broad and try to obviously allocate your time just between, or I would say more like equally between your companies. And then when it comes more towards Series A of the portfolio, because typically, there's maybe a year in between, but when they move along, you already get a good feeling what kind of evidence you get back from the companies, also from the management, how they were able to build the team. And then it becomes more like not only a question of your personal time as a partner, but also how you further allocate the proceeds of the fund. For us, it's just essential that we see these early indicators early enough to distribute more capital of the fund into these winners. Because, as I mentioned before, ultimately, these companies will drive the whole fund return.
That means that it's not the first ticket that matters. Maybe it's the second ticket that matters, right?
Ultimately, it's really the first ticket that matters for
us. Because that gets you into the business.
So it's really about initial ownership building for us, because over time, the rounds become so big that they are also out of more like our mandate. We are running a 350 million fund. So, I mean, if we have allocated a good more like 20 million per company, it's also where we somehow declare end of allocation for the company. So for us, it's paramount to really build a proper initial ownership and then defend that more like over pro rata subscription margin in the next 2-3 rounds. But then this is where our more like journey ends, and where we then, let's say, would pass over subscription rights to a follow-on or growth fund that we have. But for the early stage fund, initial ownership is absolutely key.
Absolutely key. Okay. Well, what are the sectors that you're excited about in the moment? What do you think is emerging as an exciting areas to invest?
So we position ourselves as a quite focused B2B investor, also inside, this venture capital DACH bucket. So also in comparison to most of the other funds, we are very tech focused. So we like to invest in tech, which can also mean sometimes these things take a bit longer, so to say, in their go-to-market and commercialization. But we believe that long-term, the best product in tech always wins. And we are split across 3 main verticals at Earlybird. One is the fintech introtech, which is also quite one of the largest sector teams in the fund. Then we have a big team in enterprise productivity. This is essentially most of our enterprise software. It's our deep tech practice, and it's also most of our dev tech, so AI technology investments. And then we have one industry bucket, what we call sustainability logistics.
Tim, thank you very much for your time today. It's been a pleasure.
Thank you. Great to be here.